Reliance Jio beat street estimates, helping Reliance Industries to post better than expected earnings in a tough quarter, shrugging the slowdown blues. Let's do a three-point analysis of the earnings fine print and also the outlook on the company. 1. What are the key earnings highlights of Q1 FY21? Well, Reliance Industries' consolidated profit beat estimates. They were up 31% on a year-on-year basis at 13,248 crore rupees for the first quarter of FY21, and that was aided by a one-time gain of 4,966 crores by an investment by British oil company BP and also the Reliance BP Mobility Services. Now, consolidated revenue from operations for the quarter stood at 88,253 crores, and that was compared with 1.36 lakh crore rupees Q on Q. Also, the operating profit came in at 16,875 crore rupees. Now, all were largely in line with the street estimates this time around. Now, against the backdrop of a challenging environment where 50% retail stores were fully shut, Reliance Retail clocked in a significant revenue of 31,633 crore rupees. The petchem, refining and oil and gas segment revenues declined this time. That was due to the lower price realizations, lower crude oil prices and lower throughput. Now, gross refining margins, that's what Reliance Industries earns for refining one barrel of crude oil, dipped to $6.3 per barrel. Now, RIL Chairman and Managing Director Mukesh Ambani, he said that the severe demand destruction due to global lockdowns impacted our hydrocarbons business, but the flexibility in our operations enabled us to operate at near normal levels and also deliver industry-leading results as well. 2. Reliance Jio leads the way, and how? Well, Jio's net profit jumped to 2,520 crore rupees in Q1 as against 891 crore rupees last year. That's a whopping year-on-year jump of 182.8%. Now, COVID-19-led lockdown boosted the data consumption, providing a tailwind for Jio. Now, work-from-home culture due to COVID-19, also the strong traction of Jio Giga Fiber services, the tariff hike, they all continue to drive growth further. Now, Jio witnessed a year-on-year growth of 15% in its ARPU, that's the average revenue per user, that was driven by price hikes taken by the company and higher value recharge due to the lockdown. Now, higher ARPU as well as the net addition of 67 million subscribers in the year led Jio to post a strong 33.7% year-on-year growth in its net revenue. Now, Jio's subscriber base came in at 398.3 million. Its EBITDA margin witnessed a significant year-on-year expansion of 613 basis points in the quarter gone by. Now, the expansion was driven by higher ARPU, the operating leverage, and also the cost efficiency. 3. So what should investors do now? Well, most of the pain points are taken care of for Reliance Industries. Back in the AGM, the management had elaborated on the growth plans, technology innovations, and also the interest from many strategic investors for partnerships with Jio Platforms and also Reliance Retail. The big 14 deals in Jio Platforms as well as the rights issue, they all helped the conglomerate to become net debt free right ahead of the target. Now, investors should watch out for the rollout of 5G solutions going forward, scale up of retail business, traction in technological innovations, the new smartphone operating system, Jio TV Plus, Jio Glass, and the hiving off of the oil to chemicals business as well. Now, Reliance Industries has been the biggest gainer among Nifty stocks, rising 145% from its March 23rd lows, now gaining 41% on a year-to-date basis. Analysts believe the progress in the growth vectors can further fuel RIL's valuations. Now, Prakash Diwan of Altamount Capital told CNBC TV18 that retail will be the next big galloping horse. We don't expect any selling pressure on RIL stock, and the 2,300 rupees zone may get tested in the month of August itself.